Hello everybody, Brian from Bear Bull Traders here. It's the weekend, February the 4th, and I hope everyone out there is having a great weekend. Just wrapped up January. Hard to believe we've already got 1 month under the belt here, but was a crazy January and a crazy end to the week as well. So as always, let's take a look at what happened last week and then look ahead, see what we got coming up. Still got about half the S&P earnings to go here, so here we go. So as always, let's start out with a week in review here. January 30th was a crazy week. Of course, the Fed got their quarter point rate hike in, which pretty much everybody expected. And actually, the market kind of liked the commentary they heard from Chair Powell after. The market responded fairly positively, went up as we went into the latter half of the day there as he started to speak. So, and then we had Thursday, we saw some really big names come out, reported, I would say, mostly negative earnings news. So Apple kind of missed, Amazon missed, there were a few others, Google. Again, not great earnings numbers. And then to top things off on Friday morning, we got a jobs number that came out, new jobs, up 3 times higher than, I would say almost 3 times higher than what the market had been expecting, well over 500,000. Unemployment rate down to 3.4%, I believe, which is, it hasn't been that low since 1969, apparently. So all, all good news for the economy, but in the pre-market, the traders and investors sure didn't like it, but as soon as we opened, the market just literally ripped higher. It was that buy the dip mentality that opened the markets up, and we just screamed higher. And then, as the day went on, we just sort of leaked back down and went out almost at the same place we entered the morning. So we'll take a look at those indexes in a minute, but you can see here how we finished on the week. Again, money rotating into risk assets. The Q's up 5 weeks in a row now. The Dow was the only index that was down, and those are their stable stocks. And money obviously coming out of those stocks and going back into the growthy stocks like the small caps, the IWM. Even the SPY managed a little bit of a gain this week, over 1.5%. So again, money rotating out of the safety trade into these growthy, higher risk names. So in terms of sectors, you can see there, consumer services, that was up big on Meta's report, which was pretty strong. That was one of the ones that really came out strong. So that really influenced that index overall. Discretionaries and technology also strong during the week. Again, risk on assets. Energy was the largest losing stock by far, and energy's really been rolling over. I'm not really sure why, but it's definitely broken this uptrend and maybe settling back down into a more reasonable trading range here. 2-year and 10-year, they were kind of leaking off on the week, but they jumped back up as soon as we got those jobs numbers on Friday. So the 2-year was up a little bit, 10-year a little, not changed, still inverted obviously. And of course the dollar got strong with treasuries going up, and that was up about just over 1%. Bitcoin still seems to be trading around 23,400. That's pretty much where the 200-day moving average is. So if you believe it's sort of following the technicals, then that's kind of where it's been sort of consolidating. So we'll see what that does as we get into the next week or two. And before we start looking at some charts, as always, I like to throw in a quick plug for my book on Amazon. It's Profiting as an Active Trader. You can see it there, Strategies and Routines of an Active Stock and Options Trader. So you can check it out if you are at all interested. So let's get down and look at some charts here. And starting out, as always, with the treasuries. You can see here we're kind of leaking off a little bit, but this is more normal of a treasury moves. You don't usually get a lot of moves like this. It was pretty crazy, but now we're just hanging in there around 4.3%. RSI is kind of turning up a little bit here. Stochastics really oversold, starting to head back up again. So possibly starting to move back up in the short term. See what happens there. The 10-year, again, we're just sort of flatlining here around 3.5%. Not seem to be making any big moves one way or another, but we do seem to be hooking up a little bit here. So maybe the 10-year is going to start to move up here. Certainly, if there seems to be less and less sort of risk of inflation, I think you can see the 10-year start to come back up again. Transports. Again, interesting day on Friday. As I mentioned earlier, it was a pretty crazy day. So we had this big move up during the week, and then kind of a stall out there on Friday. But big move, big breakout move on the transports. Transports always a sort of canary in the coal mine for economic activity. And you can see here on the weekly we have broken out of made a significant move out of a trading range here. Again, sort of people looking favorably on the market. Again, the Dow really just, again, we had this nice big move up where money was rotating into these stocks, and now it's really sort of just churning sideways here. And the Qs, again, just huge gap up on Wednesday, and then this really odd day on Friday where we opened up and then ripped and went almost to the previous day's high, and then just pulled back and closed out the day. Actually down on the day, but up from where we opened the market just barely. So really kind of an interesting doji. These dojis are typically bearish signs when you get a market or stock that moves up and then pulls right back to where it started the day. It's usually pretty bearish. It's buyers can't maintain that momentum, but we've had a really big move to the upside. So I'd actually be looking to see if the Qs actually fill this gap early in the week. But I think the buy the dip mentality is still there. I think there's a lot of panicked people sitting on the sideline that have looked at this double bottom that happened here, and they just, everybody was expecting another leg lower, and we did not get that. So you can see big volume here on the last couple of days of the week. Again, big volume day last week. There's your sort of 310 area where it's probably some next resistance on the Qs, but that is typically where money is going. So again, you can see here pretty much the same comments as I've just made on the Qs. I won't repeat myself, but again, pretty overbought here. Probably need a bit of a consolidation, but again, just watch out for that buy the dip. Panic buyers or buyers that have got what I call ROMO, which is regret of missing out, not fear of missing out. It's when you jump in too early or a little bit too late. This is really regretted missing out. And the IWM, you can see here, we really broke out of this range here this week. This was a trading range. This is a classic pattern where you just do a little bit of a breakout. You come back, you check back to where you broke out from, and then you just take off from there, and that's pretty much what happened. Again, same kind of price action on Friday, really getting it quite extended, so needing a bit of a consolidation. And you can see here we just stalled out right at the 200, which is sort of an area that's been resistance before. Again, it's interesting. We had a big week, but the VIX is didn't drop down anymore. That's all you can say about the VIX here. But the VIX really just a fear index, no fear in the market, obviously. The dollar, again, look at that UUP move on inside day on Thursday, and then a big move up on Friday on the jobs numbers probably, and again on the week. Still looking like it's in a downtrend, but maybe looking to break that trend. And, some of this might not be good for emerging markets, gold and silver. And there you can see Bitcoin. Again, we're just sort of stalling out there. And you can see here on the weekly, the 200-week moving average is there, not the 200-day. And let's just take a look here what we got on watch. Apple, like I said, opened up not great earnings. Had some misses on some things. think iPad sales were good, but I think that was the only really sort of bright note. But you can see here it was really just gap down, and then by the dip it just ripped higher, and it actually went out right at an area where I would have expected resistance, right around this 155 level. Again, we're quite extended from these moving averages, so thinking that maybe there's a pullback there. But look at that volume on Friday after that earnings report. So it's just let it settle down a bit, but it just seems like people love Apple. I was going to mention this. This AI seems to be all the chatter these days with the GBT and all the rest of that. And AI stocks are really starting to light up here. There's already been a pretty big move made in some of them. But this is one of these hot sector manias that I talk about. So watch for other small cap stocks that start to talk about going into the AI business. If you remember back with Bitcoin and blockchain, everybody who didn't really have a business started to say they were going to go into the blockchain or Bitcoin business, and it was worth a 50% pop in their stock. So watch for that, because this is clearly a new hot sector mania, and I'd be watching AI, the junior AIs, and people that are jumping into it. Watch for those sort of headlines and news. Just kind of search around. ATVI, I'm just still hanging out here. I'm just waiting for something to happen with the Microsoft merger. You can see here, and now I've taken a trade in dust. I got out of my gold trade. Now I've flipped my position. I think if the dollar is going to strengthen, I think gold is going to get, and the miners are going to sell off. And I think there's a gap here to fill. So I got into dust on Friday because gold and silver were starting to sell off here. This looks like it's getting ready to break out. Still in an uptrend, still holding. GDX again, really just been trading in a range here. Tried to break out. Almost looks like a bit of a head and shoulders pattern there, and there's your neckline. And we already lost the neckline, so possible drop down to here. But I'm playing that with dust, which is long short, long and being short the gold miners. Yeah, we had a nice run up on this gap up on LAC. I just actually had some. I sold some on this news that I think it was GM was going to help them get their mine going. So they had this big news here, a nice pop. I had some of that. I got out of it. Meta's really, this was the big move we made, and that's why the consumer stocks, consumer services, I believe it is, sector is up so much. Meta, big part of that. And you can see here it's really gapped up. It probably needs a little bit of consolidation, and maybe ripe for if we can sell some 200 calls. That seems to be an area where it probably won't get through for a little while anyway. TNA, this is a way to play IWM. It had a nice run up. Look for a pullback, maybe a bit of a pullback here to 42. But again, I think we still got that buy the dip going on. So Tesla, I've been playing with options. Had some 210s right here that I sold last week. Calls, they expired worthless. And I've got some calls, some 60 puts that we can't even see them on the chart. They don't expire for another month, but I'm pretty sure I'm pretty safe with those. I'll be looking maybe to sell some more upside puts, maybe, or calls, maybe next week. We'll see what Tesla does, but again, it's up into an area where there's some significant resistance. That's why I sold the calls, because I knew 200 was going to be a resistance, even if it did sort of push up there. What it looked like it almost got there, 199 on Friday. I kind of knew it was going to pull back from there, or at least I felt fairly confident. You never know anything for sure. Yeah, and UNG, I'm still watching this natural gas just melt away. I mean, it's just amazing how I did catch some of that short, but I just had no idea it was going to drop like this. So anyway, that's what I'm watching for next week, and I'll be looking for some more artificial intelligence AI stocks that possibly will be interesting to trade next week, and watching for more news of other companies announcing that they are going to get into AI. Watch for that as well. So let's wrap things up here. Here's where we are right now on all the indexes, sort of some areas of support and resistance you might want to keep an eye on here. We'll go into them specifically. Economic data, we do have New York Fed inflation expectations on the 11th. Thursday jobless claims will be interesting at 8:30. There are lots of other data coming out here, but those are two I kind of looked at. As I said earlier, possibly SPY. Still 50% of the companies there looking to report, so we've got a fair number of these. Just outlined a few of them here. Amgen, ATVI. You've got Disney. You've got Uber and Lyft is in there too. I haven't got them shown there, but Expedia, Pepsi. So quite a smattering of stuff there that's worth keeping an eye on as we go through the week. So that's it, everybody. As always, we'll be starting out Monday morning, 8 o'clock, pre-market show, engineering the markets with Jared, and then 8:30 we'll be looking at the movers in the pre-market, and then of course trading the market open with our members at 9:30. So hopefully we'll see you there. Have a great rest of the weekend, everybody. Bye for now.